Welcome back to the channel, everyone. So in today's video we'll be taking a look at ASML. ASML is one of the holdings in my portfolio. It's about a 16% position over here, and we've made 26% in gains, roughly 160 euros. So ASML did report earnings on Wednesday, October 15th. So we'll look at earnings as well. And yeah, let's jump straight into it. If you don't know about ASML, ASML is a company that specializes in manufacturing lithography machines that are used to print intricate designs onto silicon wafers. Now, a useful graphic that I found that's helped me understand where ASML sit within the chip making process is this one. So ASML is a pretty crucial part of the process, as we can see here. They're relied upon by foundries such as TSMC and Samsung, and they are pretty much the only provider of lithography machines within this space. They do hold a 90% market share of the lithography market, and they are the only providers of EUV machines, so they are pretty critical in the process as a whole. Now, looking at the numbers, ASML is sitting at a stock price of $1,000 with a market cap of 400 billion, a trailing 12-month PE of 36, which is in line with their average, and a next 12-month PE of 30. Their stock price is up 40% year to date, and if we look at 10 years, it's up 1,000%. And looking at the revenue, it has been steadily going up over the last 10 years, growing in the double digits. There has been a bit of a slowdown between 2023 and 2024, but 2025 is expected to come in around 37 billion, I think. And then a key thing to look at with ASML is the net bookings. So as we can see here, the net bookings are kind of all over the place, but they do follow the semiconductor market. So ASML is kind of cyclical in that aspect. You'll see some years where a lot of bookings come in, and then years where there's way less bookings. But this is expected to go up again with the AI boom still happening. Breaking down revenue by product, DUV machines, which are considered the last gen of lithography machines, are still making up the majority of revenue, followed by EUV and then servicing. ASML's products do last a long time, so they have machines that have been around for 30 years that are still generating servicing revenue, which is pretty cool to see. Moving on to free cash flow, their free cash flow has been going up in the double digits, 30% year over year in the last 10 years. And we have some dips in the free cash flow, but that can happen with ASML as they do spend more on R&D, capex, and acquisitions. Looking at cash and debt, so ASML is cash flow positive. They can pay off their debts in one go if they need to, and they can weather a downturn, so this is a very good sign of a financially stable company. On to dividends, so ASML isn't a company I would be purchasing looking for dividends. They're pretty low and they don't go up steadily, so not really a dividend grower. They do prefer share buybacks as their main way of returning cash to the shareholder. And then moving on to some ratios, the return on capital is above 30% in the last couple of years, and this is as their EUV bet has paid off. So they are the only suppliers of EUV machines, and they have the next generation of EUV, which is called High NA, already developed, and then they're working on developing the next generation after that. So I would expect this to stay relatively similar. On to what ASML actually reported in their Q3 earnings last week. So they reported a total net sales of 7.5 billion with a net income of 2.1 billion, and they expect their sales growth to be around 15% with a gross margin of 52% for the full year of 2025. And then they reiterated guidance for 2030, so they expect their revenue to come in between 44 billion and 60 billion with a gross margin of between 56% and 60%. And then in terms of share buybacks, they don't expect to complete the buyback program that they did set out to complete by 2025, but they do intend to announce a new share buyback program in January 2026, so that is something to keep in mind for when they do announce that. Moving on to the moat, which is what really stands out with ASML. So they are the only developer of EUV machines, and as we've said before, their market share is 90% within the lithography space, so they are an established monopoly. They've already developed the next generation of EUV, and they're already developing the generation after that, so they're a couple of generations ahead of any player in the space. And then no one has caught up to even building an EUV machine. So once that someone does come up with an EUV machine, they'll still be a couple of generations behind. And then there's the high switching costs and trust. As ASML is already established with all the foundries and their customers, it'd be very difficult for a new player to come in and displace them, as all their customers have already spent a lot of money preparing their factories to accept ASML machines. So they've built a pretty large moat for themselves in terms of that aspect as well. Coming on to risks for ASML, so there's a couple of things to look at here. First one being is controls on exports to China, which ASML has no control over, as they are bound by government regulations, and they have cited that their sales to China have dropped dramatically in the last year, and they expect that to continue. The next thing would be any disruption to suppliers could cause bottlenecks in building their machines. So, as they do act as an assembler of many different parts, any disruption to one supplier could affect the timelines of building a machine. And then we have tariffs, which was a big reason why the stock price dropped after the Q2 earnings, where management cited uncertainty because of tariffs. And as ASML does bring in a lot of their parts from outside, and then they assemble those parts and then disassemble the machine again to ship it out to build it at the customer's factory. Tariffs could be a negative effect for them, so they do need to watch out for that as well. Okay, so finally looking at outlook and estimates. So ASML do expect a total net sales of 9.2 billion to 9.8 billion in Q4 2025, with a gross margin of 51% to 53%, and then R&D costs of around 1.2 billion, which if we look here is still in line with what they've done previously in terms of R&D, and their gross margin is also in line with what they've done previously in other quarters. In terms of FY25, they are expecting to grow around 15% with a gross margin, as we've said before, of 52%. If we take into consideration their guidance for 2030, of revenue coming out to be between 44 billion and 60 billion, and a gross margin of 56% to 60%. If we take a midpoint between that, we can estimate a revenue of 52 billion, and that would be a CAGR of 10% year on year, so a return of 10% year on year. And let's say we plug that into a valuation calculator. So with the assumption that EPS based on the growth of revenue does grow at 10% as well, and they keep a relatively similar multiple of 35, we can see that ASML can grow up to 1.6k dollars by 2030. So a pretty healthy growth of 60%. So what would be my verdict from this? I'd say ASML, looking at the EPS over price chart, which I think is a pretty good way of looking at whether a company is overvalued or fairly valued. I'd say ASML is fairly valued at the moment. And then looking at their PE, they are within their historical PE ratio over the last couple of years. So for me, ASML right now is at a fair valuation. It is a company that I think if there is a dislocation in the price at any point, is a very good company to jump into, as they are a monopoly and look to grow earnings into the future. But if you do own ASML right now, as I do, I think it's just a hold. So let me know what you think. Do you own ASML right now? Is it a company that's on your watch list? And thanks for watching, and I hope I'll see you in the next video.